Welcome back. Let's look at capital importation into Nigeria. Now, according to the National Bureau of Statistics report, the total capital importation in Nigeria stood at $1.06 million in the fourth quarter of 2022. And the report shows that the Q4 figure was lower than the $2.187 million recorded in the fourth quarter of 2021, indicating a decrease of 51.51%. Joining me now is Dr. Mobola Adu, investment research analyst, AfriInvest. Joining me via Zoom. Great to have you on the show. Good morning.
Yeah, good morning.
Yeah, so quite a big drop there, 51.51% year on year for the fourth quarter. What do you think drove this?
Yeah, so basically, the total capital importation numbers that we saw released by MBSI, a combination of three major things, right? We have the foreign direct investments, foreign portfolio investments, and other investments. So these three are the key sources of capital importation into the country. Now, if we look at the numbers like you rightly mentioned, in total, that's when we combine what we had from Q1 to Q4. Capital importation fell by about 20% down to total of $5.3 billion for the year. Now, this is the third consecutive decline in capital importation that we've seen. And the reasons are not far-fetched, right? So if we look at it from a component perspective, looking at foreign portfolio investments, right? Foreign portfolio investments fell roughly about 28% down to $2.4 billion. We also saw foreign direct investment and other investment sources declining 33% and 8% respectively. Now, looking at it again, when we look at the current macroeconomic climate globally, we've seen interest rates rising in advanced economies. And then if we look at it domestically, right from 2020, when the pandemic came, Nigeria has found it difficult to attract sizable portfolio investments into the country. And that's rightly because of several capital control measures that the government tried to implement to reduce capital repatriation during that period. Now, if we bring that back all together, right, we're looking at in terms of macro figures where interest rates at advanced economies and domestic and here in Nigeria. Then you also look at it in terms of some of the capital control measures. We've all heard about several news saying that companies have found it difficult to repatriate funds and that portfolio investors are basically stuck into the country. So these are signals to investors that bringing your hard-earned currencies into the country as at this time may not be that favorably because if you look at it in terms of exchange rate also, when you want to exit the country, there are difficulties repatriating your funds. And so because of some of these factors, right, investors' sentiments are basically dampened to the Nigerian economy. And that's why we're seeing that for the third straight year, capital importation has basically declined.
Yeah, quite a big drop, 2 billion to about 1 billion. But can we call it a trend yet?
Yes, we basically can. So if we look at it, like I said, so 2021, we saw capital inflows declining about 50%. So what we've seen is that for 3 years consecutively, we've seen capital inflows into the country declining. Even on a quarterly basis, we're also seeing capital inflows declining. So basically, we can say that it's a trend we're seeing. And if you look at the whole state of the global economy, the domestic economy, we've talked about some of the capital control measures that CBN has implemented all the way from 2016. So these are some of the factors that are basically reinforcing this trend that we are seeing in terms of capital importations into the country.
What would you recommend, economic managers begin to put in place to restore, confidence of portfolio investors?
Yes, thank you for that question, Nadi. So if we look at it from a foreign investor's perspective, when you're bringing your funds into a country, I mean, there are two major risk factors that you need to consider, or they basically consider. The first is in terms of the exchange rate. So you're coming into a country at a particular exchange rate. You also have to think about when you want to exit, what is the price you are going to use to get your money out of the country. And so that speaks to the multiplicity of our foreign exchange windows, right? So we are having situations of different exchange rates being quoted. So as an investor, you have to be worried in terms of, what rate are they going to use to come out of this market when your investment horizon is due? And then the second thing that you need to look at is also that when it's time to leave this market, how able are you to get your money out as that when you want it out of the country, right? So that also then speaks into the capital control measures that we've been talking about. So we have situations where there are uncertainties about the exchange rates. And then in the official window, the case we are seeing of large funds being trapped into the country is basically because as at when you want to exit the country, how long is it going to take? You're seeing cases where people's funds are being trapped for months. So because of that, the economic manager, basically the CBN, they have to look into ways in which they can ease some of these concerns for foreign investors. And until that happens, this trend is likely to persist.
And, given the shocks, we've seen in 2022, down to the first quarter of 2023, what are you expecting for capital importation in 2023?
Yeah, so thank you. So I'm going back, just piggybacking on what I said earlier. If we look at what happened within the first quarter of the year, we had political uncertainty in terms of the coming aboard of a new administration. So because of factors like that, you would expect that at least for Q1, the numbers were likely to be subdued. So as you rightly mentioned, in Q4 2022, total capital inflows were just roughly around 1.06 billion. So we expect to see a similar trend for at least Q1, even possibly lower. But moving into the rest of the year, we're expecting to slightly pick up. But on a general perspective, when we put in together what we expect to see for the entire year, basically we think that capital importation numbers could close slightly lower than the total 5.3 billion that we recorded for 2022. All
right. This will definitely have an impact on the equities market. What are you expecting?
Yeah, that's a good question. And rightly, we've observed that at least for January and February, we're looking at total market transactions in terms of the size of transactions. In January, we saw foreign investors' share of transactions accounting for roughly just 13%. In February, that dropped to 10%. So on one angle, you can see that in terms of capital inflows coming to the equity market from foreign investors, their share has been basically on a decline. So we're seeing foreign investors just accounting for 10% of market transactions. If we look back to 2019 or far back, foreign investors used to hold close to 40-50% of the market. But that's not what we are seeing. And then also, if you look into the kind of transactions that we're not what we are seeing is mostly it's exiting the equity market. So in January, net outflows into the market was roughly 5 billion naira. And then in February, it's more than doubled to 12 billion. So we are seeing sizable reversals from the equity market for foreign investors. And just like we mentioned earlier, the reasons for their hesitancy to come into the equity market or into Nigeria in general is because of some of the lingering issues that they've been facing in the FX market. We've talked about the issues around exchange rates. But in general, we believe that because now the market is largely controlled by domestic investors, so domestic investors' share of the market is close to 90% now. So because of that, the equity market could still be resilient, and we expect the market to at least close positively. Q1, the market closed up by about 5.8%. We still think there are reasons for the market to still close slightly bullish this year when we compare to last year.
All right, we'll definitely be watching out for that. But what do you think are the low-hanging fruits? You think the incoming administration could tap into to optimize, FX inflows from non-volatile sources such as non-oil exports and remittances?
Yes. These are discussions that have been held severally. One key point to look at is remittances, right? So remittances currently are around $20 billion. I mean, that's a lot of money for coming into the economy. But then again, for the new administration, we have to think about how you can direct these funds to flow in through the official channels. So what I mean, right, that the CBN they've tried to incentivize people who are workers abroad to bring in their money through official channels, through the Naira for the dollar policy that was introduced last year. So, but the issue with this is that because of the wide gap between the official and parallel market rates, the rebate on such a policy is basically non-negligible in a way, because you're seeing that official markets having rate of $4.60 to $1, whereas in the parallel markets you are seeing close to 700. So because of that, people will still be more willing to pass these funds through unofficial sources. So for the new administration, they have to look at ways in which they can bridge the gap between the official and parallel market rates, make the exchange rates more reflective of market conditions and expectations. And with that, we should see more inflows or more FX inflows into Nigeria for the new administration.
Yeah, so much work for the new administration to do. I hope they hit the ground, running when they're sworn in. Thank you so much, Dr. Omobola Adu, Investment Research Analyst, AfriInvest. Thank you.
Thank you for having me.